If you're looking to buy an investment property, a DSCR loan is one of your best options. And this is because DSCR loans actually don't need any of your personal income. They use the rental income from the property to get you approved for the mortgage. So this is a home here in Ohio, and I want to run through an example with some real life numbers here. So the way that DSCR works is off of a DSCR ratio. Okay, so we look at the gross rent for the property. So this property in Ohio here in the background is going to pull in about $3,000 per month. It's a duplex here. And then the mortgage on this would be just around $2,447 per month. So what you do with DSCR is you take the gross rental income and divide that by the mortgage, and that gives you a DSCR ratio. And usually if this is above 1, then that means you can get approved for the DSCR loan as an investment property without any need for your own employment records or income verification or any of your own personal income. So getting approved for a DSCR loan is all about the ratio requirements. So like we saw that ratio before, greater than 1 is going to be your best chance of approval and getting a better rate with a DSCR loan. Now, what we can do is if you're in between 0.75% or 1, or there's no ratio, there are some loan products available for DSCR loans, but you're going to have a higher interest rate with those and a higher down payment with those programs as well. And then DSCR loans have what's called a prepayment penalty in most states. And so when you opt to have that prepayment penalty, you're going to get better pricing, meaning a lower interest rate. Now, there are some states that don't allow a prepayment penalty or they restrict the prepayment penalty. And in that case, you're going to have a higher rate with a DSCR loan. But basically what a prepayment penalty is it means you're not going to pay off your mortgage within, let's say, 1 to 3 years. And if you do, then there's a fee associated with paying off that mortgage early. So for most investors who are holding long-term with a DSCR loan, a prepayment penalty isn't an issue. Basically, the reason these prepayment penalties exist is so that an investor doesn't purchase a home and then immediately sell, let's say, a year later if the price increases, because that's when that fee would come into play. But if you're holding a DSCR loan for a long period of time, maybe 5 years or longer, then you're not going to have to worry about that prepayment penalty. So let's go through some quick pros and cons here. First pro is that there's no income or employment verification. This is huge. So if you are an investor who's buying multiple properties and you have complex taxes, or maybe you're just self-employed and you have really complex taxes, you have a lot of write-offs, then getting a traditional loan is going to be difficult compared to a DSCR loan that doesn't look at your income or employment at all. Also for people who are just, maybe you're in between jobs, maybe you just started your company, maybe you are switching to commission income and you've made really good income over the past year, but you can't verify that with a traditional mortgage. A DSCR is only looking at the income of that rental property rather than your own personal income. Also because of this, the process is way more simplified compared to a traditional mortgage because we don't have to do all the income and employment verification that would be needed on a traditional mortgage. Pretty much, as long as you have the credit score, the down payment, and the right ratio for the DSCR, then you're good to go. Now, really quickly, DSCR stands for Debt Service Coverage Ratio, and it basically just means it's the ratio that shows how much the income of that property covers the debt of the property itself. Another big pro to DSCR loans is there's no limit on the property count. So when you're getting a traditional mortgage, you're usually going to run into a limit of around 10 properties. Above that, you're going to start running into issues. DSCR doesn't have any limits. Also, a lot of investors want to close in an LLC, a trust, or a corporation, and that's something that we can do on DSCR. And it's good for self-employed people who have complex finances. And again, there's no debt to income ratio. On a normal mortgage, if you have a lot of debt showing up on your credit report compared to the income that you have, so that debt to income ratio, if that's too high, you're not going to get approved for the mortgage. DSCR loans do not care about DTI at all. They're not looking at your debts that are coming in compared to your monthly income. They only care about the rental income coming in from the property compared to the mortgage on the property itself. Now, there are some trade-offs here. So with a DSCR loan, you're going to have a higher interest rate, usually around 1 to 2% higher than a standard conventional loan. Also, you're going to run into larger down payments. So the minimum would be 15% down, up to around 30%. Of course, you can do more if you want to. But the down payment changes based on the risk factors of the loan. So if you have a lower DSCR ratio, you're going to have a higher down payment. If you have a lower credit score, you're going to have a higher down payment, for instance. No owner-occupied properties are allowed with DSCR. So these have to be investment homes. You can't live in the home with a DSCR loan. And then they also have prepayment penalties most of the time. Like I mentioned earlier, having that prepayment penalty is going to give you a better rate. So you can actually choose if you want it or not. But there are also some states that have restrictions on those prepayment penalties. So basically, as long as you're planning on holding that loan long term, having that prepayment penalty actually makes sense because you get a lower interest rate compared to the fee that you would have if you're not planning on selling the home within a couple of years. Now, if you want to get started on a DSCR loan, our team does these loans in all states except for New York. And so there's two options on how you can reach out to us. If you just want to schedule a call with our team, you can go to winthehouseyoulove.com/call. And then if you just want to go ahead and get started getting pre-approved with this DSCR loan to see what you can qualify for, what those numbers would look like, and then also you get a pre-approval letter so you can go shopping for homes, you can go to winthehouseyoulove.com/apply. You'll be connected with a helpful loan officer on our team who can walk you through getting set up for a DSCR loan. Okay, let's go through some general loan requirements here you're going to run into with DSCR. Now, something to keep in mind in here is that we have multiple investors on the back end with these DSCR programs. And so these investors can all have slightly different nuances between these. So what I'm going to mention here is kind of a general overview, but just keep in mind, some have different restrictions than others, or some might allow a first-time home buyer to actually be able to use a DSCR loan, but they might have a different down payment than another investor. So just keep that in mind when you reach out to work with us. Your loan officer can help walk you through some of those differences. But here's some of the general guidelines here. So first, with credit, 620 is going to be the minimum credit score here. But 680 is recommended, especially if you're a first-time investor. If this is your first investment property, DSCR is a great option, but 680 and higher is going to be better for you. A lot of the investors don't want to work with first-time investors unless you have a 680 or higher. For your experience, first-time investors and first-time homebuyers are allowed with some of these lenders on the back end. But keep in mind, first-time homebuyers, you can't live in the home with the DSCR loan. It just means that you would be currently staying at your where you're renting your home, and then using this as the first home you've ever purchased would be an investment property. Primary residence. So you have to have an established primary residence for the past 12 months. We have to prove that you have some sort of housing expense currently, especially if you're going to be moving forward with purchasing this as your first home purchase ever, or your first investment purchase. And then for the property type, so these are investment properties again, so they can't be second homes, they can't be primary residences. And a second home is something where you live in that home for a period of the year and then rent it out. It's not the second home you've ever purchased. Okay, I know that can be a little bit confusing, but just think about DSCR loans only for investment, meaning that you're never going to sleep a night in that home. That's what an investment home means. So what you can do is you can do single family, you can use 2 to 4 units, condos, and keep in mind, no house hacking is allowed. So if you're buying a multifamily home, you can't live in one unit, rent out the others, and do a DSCR loan. You cannot spend a night in the home if you're doing a DSCR loan. Okay, some basic financial requirements. You can do 85% LTV, so that's 15% down with no mortgage insurance if you have a high credit score. However, kind of the sweet spot for getting the best rate on a DSCR loan is going to be if you have 70% loan to value, so that's 30% down with a prepayment penalty. Most people with a DSCR are going to sit around 20%, 25% down. However, again, if you want the best rates with DSCR, 30% down is going to be the best for you. But there are programs that can allow you to go down to 15% down with no mortgage insurance. DSCR also usually is going to want reserves. And so reserves are usually around 3 to 6 months of that mortgage payment sitting in your account after you pay for the down payment. So for instance, if you need 3 months reserves on the DSCR program and that mortgage payment, that future mortgage payment will be $2,000 per month, you would need $6,000 left over after you pay for your down payment. So it basically is a little bit of a cushion in your account, showing that when you're paying for your down payment, you're not wiping out your bank account down to zero. The loan amounts, minimum is going to be $75,000 up to $3 million. So there's a pretty big range that you can have with DSCR. And then for the income, the income for that property is going to be proven through an appraisal. Okay, so long-term rental income is going to show up on Form 1007 as an appraisal, or we can use the current lease income on the property if there's one already. Short-term rental income can be an option as well. We can pull that through AirDNA, a short-term 1007, or 12-month earning history on the property, or 12-month earning history on the property to show what that short-term income is coming in. Okay, and a couple other features here. So for the terms for DSCR, you can do a normal, like 30-year fixed if you want. There also is a 40-year option where you're going to have 10 years that's interest only and then a 30-year fixed after that. If you want a little bit more flexibility with your cash flow upfront on a DSCR loan. For the income for the property, you can use a gift. However, the gift cannot support any reserves that are needed here. Seller concessions, you can do up to 6% of the sales price of the home in seller concessions. So that can help pay down your closing costs. First-time investors are allowed, and then first-time home buyers are allowed as well. Just keep in mind, those can have higher down payment requirements than something like 15 or 20% down. And then for credit, credit is going to be based on personal credit history, even if you're closing in a business. I know sometimes the DSCR and closing in an LLC, people have this thought that, well, I can just never pay it back and it's not going to impact my credit. That's not true. It's using your personal credit history even if you're going to close in an LLC. Okay, so just keep that in mind. Your personal credit history is what's being used. What most people do is they start a new LLC for that property they're purchasing. So your personal credit is used, and then they close it in that LLC, and it's going to be maintained on your personal credit history. So if you'd like to get started, you can schedule a call with our team at winthehouseyoulove.com/call or winthehouseyoulove.com/apply to get started with your pre-approval on this. If you have any questions, leave them in the comments about DSCR, and I'd be happy to help you with them.